Hello, my name is Chris Shea. I'm a financial advisor at BPS Financial Services, and this is a class and presentation on financial recovery. First question is, what do you want to learn about financial recovery? What do you already know? We're going to go over the agenda, the ground rules. Pretty simple here. We'll go over these right now. Got a question? Write it down. Ask it to me. I'll get back to you. We'll help you out. And I'll do an introduction. So the objectives of this presentation on financial recovery is assess where you're at right now. That's the biggest thing. That means writing it down, putting it on paper, putting it in an Excel spreadsheet, or something else that you can utilize to help you assess where you're at. If you don't know where you're at, you can't get out. Then we're going to identify some ways to increase your income and decrease and prioritize expenses, hopefully. Then you develop the plan. Then you identify the steps to successfully implement that plan, because this is going to require change in your life. It's a tough thing to change, particularly when it comes to your money. We're also going to help you recognize against scams to help sure that you don't get your money taken from you. And then talk about timeframes for reviewing. You don't want to review every single week. This is going to be a month-to-month at least basis to make sure that you're on track. So with that, let's get started. Again, my name is Chris Shea. I'm a financial advisor with BPS Financial Services, and I am a financial planning and implementation partner with my clients, meaning I help them to figure out their roadmap and then implement what they want to do to achieve their current and future needs, wants, wishes, and desires. Steps to financial recovery. Again, we're going to harp on this. Evaluate your current financial situation. Where are you? How much money do you have coming in? How much money do you have going out? Where is it going out? Is it fixed expenses? Is it discretionary expenses? What can you do to change your mix there? Then you develop a financial recovery plan. You've got to make the plan. You can't just say we're going to spend less money. That doesn't work. You've got to narrow it down and be very laser-like and specific in your focus on this. Then you implement your plan, and then you evaluate and adjust, because you're going to have to adjust because life happens, things change. You're going to have to change the way in which you recover. So again, steps. 1, evaluate your current financial situation. What's your income? What are your expenses? Is income or expenses higher? You got to find out. You got to write it down. You got to put it into some sort of piece of paper or Excel spreadsheet or Word document or something that says, this is my income, this is my expenses, where am I at? You got to track your spending. Every penny. You go out and you spend $4 on the lottery. That's money you got to track. You spend $5 getting coffee in the morning. That's $5 in your eating out budget you got to track. These are things you have to do, because once you track it, you can attack it. So there's an activity guide with this. I'm going to upload it and show it to you so you can get it. But the first activity is your monthly income and expenses. Read the scenario, review the worksheet, then answer the questions. This is what you're going to do, but do it with somebody else first, so you can see that you're not the only one that's having these challenges, to figure out where exactly things are going awry. Utilize the worksheet, take a look at somebody else's scenario. It'll help you out with yours. Consider ways to increase your income and decrease your expenses. That's the first thing you've got to do. How do you increase your income? Great word in today's society, side hustle. Find a side hustle. That'll increase your income, as long as it decreases your expenses. Make sure that you're not taking a side hustle on that's bleeding more money out of your life. Then figure out where if you can just decrease your expenses. Like I mentioned, coffee at a coffee shop in the morning, $3, $4, $5, $6, 15, 20 times a month, adds up to a lot of money real quick. Figure out if there's a way you can do that. And around your expenses, you want to prioritize basic necessities first: roof over your head, water, heat, electricity. That's the first thing. Food. Then you go to high priority expenses next. And then whatever's left over, that's what you pay. Sometimes this might mean you're going to have to talk to creditors to figure out a different payment plan. But we'll get into that. And there's other things that we can talk about as well. Financial recovery plan. You've got to develop it. If you're in debt, you have to create a plan. You can't just wish it will happen. You've got to write it down on paper and figure the math out. It's a basic equation: money in, money out. It's not a complicated equation of calculus. It's basic money in, money out. Where are you at? This will help you save your money, pay your bills, and potentially eliminate and reduce your debt. You should include some financial goals in your spending plan. Do you want to buy a new car? Do you want to buy a new house? Do you have a down payment you want? Where do you want to be? Write it down, put it in the plan, and work the plan. Financial goals. Identify and write them down. Make them smart, specific, measurable, attainable / achievable, relevant, timely, time-bound. Okay? A goal of I want to save for a down payment on a car, that's really vague. A SMART goal, I want to buy a $30,000 Prius. I want to have $5,000 down in 1 year. Specific. You know the car. You know the dollar amount. Is it measurable? Yes, I want to have $5,000 in 12 years. Is it achievable? I don't know if that's achievable for you or not. Maybe so, maybe not. Depends on where you're at. Is it relevant? Yes, you need a car. Okay, you want to organize your goals by time frames. 1 year out, 3 years out, 5 years out, 30 years out. Put your goals down, put them on paper. You'll actually be able to recover from where you're at financially. And then you want to reevaluate your progress. Are you on track? Are you behind? Do you have to amend your goals? Do you have to change your spending habits? Figure it out. Write it down. Put it on paper. I've said that a few times. I'm going to say it a few more times. Your financial goals. Okay, in the activity guide, again, you've got a financial goal segment here. Write 1 or 2 of them down. Okay, big goals: buy a house, buy a car, go on a trip to Europe. I don't know. They're your goals. Make them for you. And then the supporting goals that can help you make that. Right? You got to save $5,000 in a year. Okay, did I save $1,500 by 3 months from now? Yes, no, maybe so. Who knows? Right? And again, make sure they're SMART goals: specific, measurable, attainable, relevant, timely. SMART goals will help you get there. This is the one that people don't like. Develop a spending plan, AKA budget. That's right. I said the B word. Sorry. That's what it is. It's a budget. It's a spending plan. One of the most bizarre things that happen when people actually put a budget together is it gives people a sense of control and power over their money. It lets them know what they're doing with it. It lets them choose to spend money on things. Give you an example. Okay. I have a monthly clothing budget for myself. I don't buy a lot of clothes. I'm not a clothes guy. That's just me. However, I have a monthly budget of $100 that I can spend on clothes before I've got to figure out if I'm going to take money out of somewhere else. What does that do? It enables me to go out and buy clothes if I want to without any concern about how much money it costs, up to that $100. It's totally freeing. If I like a t-shirt, it costs 15, 20, 30 bucks, I buy it. If I like a suit that costs 500, well, now I've got to have a conversation with myself and say, what am I going to change in my budget to make sure that I have the money to cover it and I'm not going into debt? Gives me a sense of control. It can also help me build assets to improve my quality of life over time. Say I've got $100 in my clothing budget again. I spend 20 bucks on a shirt. $10 on socks, another $15 here. I'll spend $45. I've now put $55 into savings. So I've increased my savings by not hitting the target on my budget, which was allowable. I'm now saving for the future. Again, it can reduce the anxiety of not being able to meet your expenses because you know where you're at with them. And it helps you know what your income and expenses are every month. Again, it's freeing to know where your money's going, but you got to develop it and put it into work, which is the next one of implementing your plan. You developed it, put it into play, evaluate your current situation, establish those goals, and develop the plan. That's what it takes. Work, effort, writing it down. Said that a few times. If you're having trouble putting it together, contact a professional. A lot of financial advisors offer it as part of their services. I know I do. I have clients that I help with their budgets because they're having spending challenges. There's also some links here that I've put in the presentation, benefits.gov. There's local national assistance program. Regardless of your income level, you can get help. There is help out there. Find it. People are willing to help you. Some of them come with a cost. Some of them are free, but look them up. Credit. We have a whole segment on rebuilding your credit and repairing your credit, but we'll get into a little bit here. First thing you do is get a free copy of your credit report. freecreditreport.com. Look it up. Identify and correct any errors. Again, we got a whole presentation on how to do that. Contact your creditors. Explain your situation if you've got trouble paying off your bills. They want to work with you if you communicate with them. If you put your head in the sand and don't communicate, they're going to assume you're just blowing them off. And then they're going to come after you and it's going to get messy and ugly. You can negotiate payment terms with creditors and say, hey, look, I want to pay you off. I just don't have the money right now. They want to collect the money. That's how they make money. They want to work with you. Work with them. Okay? And then you can opt out of receiving credit cards in the mail that are unsolicited. Take advantage of that. It can help you to not open up new credit and get yourself farther in debt. The only caveat I might put on that is if you are challenged and you do have a plan and you are working with someone, you may want to get a couple 0% credit cards to help reduce that interest for a period of time and help you get out of debt faster. But again, it's got to be part of your plan. Don't just sign up because you think it's going to be great to spend more money and not have to pay interest on it. Make it part of your plan. Again, I mentioned this last time. Free credit report, annualcreditreport.com. You get one every 12 months. Get it. Find out what your credit report looks like. It's going to impact your life in a positive manner. Check for the errors again. If there are errors, contact the credit reporting agency. Have the documents, though, to back it up. All right? You've got to have the documents. You can't just say this is wrong. You got to have the documents say, I paid this X time, and they'll be able to work with you on that. Again, know how much you owe a creditor, how much you can pay them, what you can realistically pay, and be honest and transparent. They, again, want to work with you. You got to explain your situation, efforts you want to make to pay them back, and have a plan. So you're going to ask for 6 months of help. In 6 months, you better call them back and tell them where you're at. Update them. Maybe update them monthly and let them know where you're at. It'll help. Communicate, communicate, communicate. It's your best friend in dealing with creditors. Again, when you do it, you want to contact them and document the conversation or write a letter. Stay calm. Ask about the hardship programs. Be honest with yourself. Be open up. And most importantly, if you can't do something, don't accept the deal. Don't try and people please in this. This is your life, your plan. Work it, get in touch with your creditors. Okay. A company agency might be work for you if you need help creating a spending plan. If you're not able to track your bills, if you're not disciplined enough, and if you don't want to negotiate because you know you'll just cave. Okay. Some of these you can do outside of a credit counseling agency. Like I said, I work with a few of my clients on some of these types of things. Other advisors do it as well. There are individuals out there that help you with bills and spending plans. Look for help. That's your bottom line. Okay. Credit counseling agent can help you manage your debts and your money. Can learn about consumer credit, money, debt managing, budgeting. Again, we've also got a bunch of courses that we can talk and help you about and help you develop the spending plan. Financial advisors, again, are willing to help out with some of this, but they're also credit counseling agencies. Scams. Scam. I get spam mail all the time. My email, click on this, click on that, click on this. Don't fall for it, please. Okay. Don't give them information without making a phone call first or going to a legitimate website. Stay away from the scammers. Okay. If people are saying they're going to remove accurate information, they can't do that. Okay. It's not an overnight fix. It can take years to repair bad credit. Miss a mortgage payment, it can take multiple years. Bankruptcy, again, multiple years. So make sure that you are willing to put in the time to repair your credit. No one create a new identity for you. Okay. But they can steal your identity. So make sure that you're not being scammed on that. And companies that are going to help you with this, they're going to provide a service before requesting payment. They're not going to say pay me in advance. So make sure that you don't fall for that. Pay me now and I'll work for you later. And again, if you want to, and you should, order your own credit report. Figure it out. Contact someone. Ask for some advice. Again, we've got a whole thing on understanding credit reports and scores. Check out that seminar. It'll give you some tips on how to write a letter. Reviewing and adjusting your plan. First thing, set your goals, figure out how you're going to manage it. I love item number 1 here on the spending plan, automatic payments. And number 2, online bill pay. Pay your bills automatically. Don't let them go through the mail anymore. Everything's technology based. I just make sure that I have my budget set up so there's enough money in the account to handle when the bills go out. I have a lot of my credit cards and other things paid at the end of the month or the middle of the month, so that I manage my cash flow. Okay. You want to do your spending plan and then review it periodically. The first couple months, you're going to want to track it every single month. But once you get it up and going, you can do 3 months, 6 months, even a year. All right. And you should definitely have a financial goal and spending priority meeting with your family every 12 months. Or if there's a life-altering event like a new job, you get laid off, you buy a house, you have a baby, life-altering event, check out your spending plan, your financial goals. And again, get your credit report at least once a year before you apply for a loan. Know where you're at, know what's going on. A lot of banks right now will give you your credit score anyways, so you can find out right from your bank or your credit card company what your credit score is. I know I check mine every month on multiple occasions, on multiple websites, just to see if there's any major discrepancies. And if one's way off and way out of whack, I take a look at that. If they're all about the same, because they're all going to be different, I'm okay with that. Adjusting your plan. Again, it can take years to repair bad credit. All right, legitimately. You can't, it's not an overnight fix. It's not going to happen immediately. It takes time. Okay. When you accomplish something, adjust or create a new financial plan. You got the down payment for the car. Woo! Now you got monthly car payments. You got to adjust the plan, figure out what's going on. Transition to a new stage in life. Again, you get married, have kids get out of the house, divorce on the other side, transition to a new stage in life, come up with a new plan. And make sure you've got things in place and you're somewhat prepared for the unexpected. I know it's unexpected. You can't be fully prepared for it, but have an idea of what's going to happen if something bad happens. Okay? Figure that out. Insurance coverages. All right? You want to talk to your insurance people at least once a year. And I do mean talk to them. Don't make the mistake that I made and have very bad car insurance, get into a car accident, and get practically nothing for a really bad circumstance where the other person was at fault. Call a professional, get the coverage that's worked and appropriate for you and your circumstances. You might need umbrella insurance, you might not, but check and call and talk to a professional to make sure that you're properly covered. Insurance is here for two things: really expensive and unexpected. It's not for the everyday thing like you get into a $400 car accident and you got to fix your fender. That you got to pay for out of your pocket. It's for when your car gets totaled. Very expensive, unexpected. Rebuilding your savings. You need to do this while you're paying down your debt. I always tell my clients, have a $10,000 at least emergency fund. Okay. Even if you've got debt, you want to build this up at the same time. The biggest reason for this is you don't have to put something on a credit card if an emergency happens. You have $10,000 in the bank, you get in a $1,500 car crash, you pay it out of your emergency fund, and then you pay yourself back as opposed to putting on a 20% credit card, and now you're paying $1,800 for a $1,500 accident. Make sure you have savings in place as you start to do this. Again, there's a good reason why you have savings. It's not so that money's just sitting there in the bank. If you're saving on 20% interest, your savings account is paid for itself. It's a great return on your money. Review and rebuild your investments. If you got an investment portfolio, review it once a year. When you make a life change, when the market changes, adjust your allocations after talking to a professional based upon your risk tolerance. How soon you need the money. The biggest thing here, though, is talk to a professional or do the research yourself. It can be very confusing, and try not to fall into the habit of going conservative after things go bad and then missing out on the recovery. I've seen too many people do that. And not only do they lose money on the downside, they lose money on the upside. Don't make that mistake. Talk to a professional that can help you take some of the emotion out of the very emotional state of your investments. Now you've started to do it, you got to prevent future setbacks. You got to rebuild your savings. Continue to learn what you applied. Be patient. It's not going to happen overnight. Got some clients, it takes 5 or 6 months to get on the right track. Educate yourself. Keep moving in the right direction. You're going to move forward. You're going to have setbacks. You're going to move forward. You're going to have setbacks. But keep moving forward even when you have those setbacks. And ask for help. That's the bottom line. Don't do this yourself. I've seen certain circumstances where couples actually implode because of their financial stress. If they'd gone out and gotten some help, maybe it could have saved a wonderful relationship. So hopefully we've given you some tools to help you with financial recovery. I'd love to hear about what you've learned. We're going to cover what you should have learned in a second. If you've got any questions, feel free to reach out and ask me. I'd love to be able to help you out. And if you got some methods for improvement on this, let me know. I'd like to hear from you as well and find out where I can do better, because there's always room for improvement. So with that, hopefully you've learned how to develop, implement, and adjust a financial recovery plan, We've gone over a couple ways to increase income and decrease expenses. Side hustle, don't overpay for the side hustle. Gone over prioritizing your spending because that's really important. Talked about the reasons for developing a financial goal and spending plan. That's what's being the crux of getting you into a financial recovery situation. And touched basically on the high levels of credit and how to avoid credit repair scams, because you don't want to be taken advantage of. So again, I am Chris Shea, financial advisor with BPS Financial Services. Hopefully you found this presentation to be an educational one and maybe a little entertaining. If you've got any questions about your financial recovery, feel free to reach out. Be glad to help you out with that.